Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's take a look at the gold market as usual in the second video today. The gold market, retracement that we discussed recently stands in place. Despite that today in the morning you can see some upward attempt of the market to go higher. Based on the picture that we have on intraday charts, it seems that we still should get the second leg back to the 1760 or even 1745, an area that we have discussed a lot recently. We think that this vital area for the gold in a row with the 1723 lows, which actually is the vital border for short-term Polish context on a daily chart. So market has to stay above these areas to keep the Polish scenario valid. So still on the daily chart, you can see the market is struggling with this solid resistance, and the normal price behavior suggests that it should be some respect, some pullback out from there is the first touch of the strong area. As we said yesterday, we in general keep an eye on this type of action. So here's butterfly. Our butterfly has been completed now. Actually, we do not need it anymore. Yesterday, when we've cut this reversal session, we said, well, it seems that market more probable should get some kind of compounding retracement in the shape of the ABCD pattern that usually happens on the market. And today, as you can see, right now, market has formed minor grabber here, already stands in place. This market tested the ABCD predictor, close below it. And now take a look. I would not know how close this bar, but it still could be another grabber could be formed if market will close below this area of the 1782. In this case, second grabber will be in place, and that could confirm the idea of the deeper retracement, kind of the ABCD retracement. As you can see, OP stands in agreement with the 1760, while the XOP perfectly agrees with our next major area around 1745. So currently, if you haven't taken the position here as we suggested, because yesterday we said that it makes sense to split the position and take 1/3 of your trading volume around 1760 and 2/3 around 1745. So if you have taken position here, now you could move stop to the break-even and see just what will happen. And do not worry about trade. If you do not have it, currently I would sit on the hands for a while and wait for clarity. Because currently it seems that indeed we could get first at least return back to the 1760, or potentially it even could be the 1745 right here. Besides, if you'll take a look at the interest rates performance, let's take a look what is going on the 10-year yield. So once this action has been completed, and we said it's relatively strong, as CDLX shows acceleration to the OP target, that is an indirect sign in favor of the further drop to the XOP later. But take a look what has happened. Once the pullback has happened in the shape of the normal ABCD pullback, actually we have here got steeple to sell. On this downward continuation, market hasn't taken out of these lows and was not moving directly down to the next destination point. It stopped and now shows the upward action. It means that we could get greater ABCD retracement instead of the direct continuation. Continuation will happen, but from the higher level. And that also supports an idea of the deeper retracement on the gold. So that's the reason why I wouldn't consider currently the taking long position immediately. And now it makes sense, current environment suggests that it makes sense to wait a bit more and expect to see the gold at the proper levels and lower standing levels, where it will be more pleasant to buy the asset. So that's what we intend to do currently on the gold market.